Just this past week, Trump announced that he will be looking at cryptocurrencies as part of the US strategic reserves. While this is all under review, the majority of the public don't actually understand what cryptocurrency means. And for those who do, only 5% are very confident about it, while 63% have very little to no confidence when it comes to crypto. So the question becomes, how can a technology that most people don't know about can be seen as something that would inevitably change the economies around the world? And more importantly, how does that affect you right now? Hi, my name is Paula, and I like talking about technology and how it affects you and the society. I've worked in tech as a product manager and I've helped build apps and software. And I got that tech can be absolutely intimidating when it comes to just these big concepts that's so hard to grasp. So I try to break down a lot of these complex narratives and technologies into something that's easier and accessible for you to understand. Also, just for today's video, I made a guide for those who want more background when it comes to cryptocurrency and blockchain and what does that mean for you. Anyways, back to the program. So let's go for a quick definition here. Stablecoins are a type of cryptocurrency tied to a stable asset like the US dollar or gold reserves. They run on blockchain technologies, which means that they aren't controlled by any single authority, and every transaction is recordable and traceable. This is a key distinction, and it's very important because unlike other cryptocurrencies that we've usually heard of, like the meme coins, Doge coins, and even the Trump coin, stable coins are stable because it's pegged to government currency or even reserves like oil reserves. This means that they don't experience extreme price swings, making them more reliable. And since they avoid this sort of wild volatility of other cryptocurrencies, many retailers, governments, and banks are starting to use them as digital payments through decentralized finance or DeFi. The most popular stablecoin as of August 2024 are USDT, USDC, and DAI. And these are the stablecoins that are pegged to the US dollars that account for 7.5% of the entire crypto market, which is huge right now. And I want to bring up why they're important and why we're talking about it. Well, stablecoins operate under blockchain technology, which is used in these applications such as lending, remittances, managing these financial assets, and anything that goes with digital finance. You can kind of see this happening all over the world now. People in Argentina, Nigeria, Lebanon use them to escape inflation when their currency isn't actually reliable. The trend is there. Like 87% of Argentinians believe that crypto and blockchain can help them achieve greater financial independence. 76% of adults see crypto as a solution to some of their financial frustration, including those inflation that we talked about, but also with high transaction costs from the government. There are people in Lebanon that have lost a lot of their birth certificate, their government documents, and making it hard for them getting a bank account. And all you need with cryptocurrency is the access to internet. The movement around stable coins and cryptocurrency are getting big enough that powerful governments like US and China are reacting and monitoring them. Trump's recent statement about including certain cryptocurrencies in the Federal Reserve shows them that much attention. On the other hand, conversely, China has adopted a restrictive stance when it comes to private cryptocurrencies, including stablecoins, to maintain financial stability and control of capital flows coming in and out of the country. And most recently, China's foreign exchange regulator introduced these new rules requiring banks to flag risky transactions, and particularly those involving cryptocurrencies. And these measures, you can argue, are part of China's broader strategy to introduce their own digital currency called e-yuan. So now that we've been talking about how cryptocurrency is being used around the world and why it's getting more traction and getting more significance, you're kind of somewhat caught up into what you just need to know. Here are the fights that you're probably going to be hearing about stablecoins and cryptocurrency in the future, especially as they become more relevant. And with this, I decided to use these three main narratives that dominate almost every issue we have and probably will always have in the foundation of future agreements. And that's the conservative view, the centrist view, and the left-wing view. The conservative view is mainly about free market innovation, no CBDCs. So very much against what China just did there. Imagine a future where every dollar you spend is tracked by the government. That's one of their biggest fears. And they don't want that CBDC tracking every movement. They believe that innovation should happen without too much government interference, is allowing businesses and technology to grow freely, but with less regulations. But with less regulations, you've also seen how things can go wrong when it comes to crypto. Just look at the collapse of FTX and Terra Luna, where scams and bad actors can take advantage of the system. And so without these clear protections, everyday investors like you could be left facing financial loss with no safety net. At the end of the spectrum, though, the left-wing party would probably want to regulate or even replace this government-backed digital dollars. In their argument, if private companies run digital currencies, wealth inequality will continue to grow, and everyday people like you will be at risk, just like in the FTX collapse. And stablecoin has been known to be used to launder cash, evade sanctions, and even finance terrorists. That's why worldwide there is some sort of crackdown happening on crypto. But banning stablecoins could definitely just ignore all the benefits, like that easier cross-border payments and decentralized finance that Lebanon, Argentina, and Nigeria are using it for. A US digital currency or CBDC can also raise privacy concerns by giving the government control over all the digital transactions. And if regulations like this can go too far, stablecoin innovation could move overseas, which reduces oversight instead of even increasing it. And now, if we look at the middle view or the centrist point of view, their main point is regulated, but not enough to stifle any innovation. So what's the right balance between innovation and regulation, though? Some people believe that the middle ground is the best approach, encouraging stablecoin innovation while protecting everyday people from financial risk. That means that the Federal Reserves could create a digital dollar while allowing companies like Stripe, Visa, PayPal to issue their own stablecoins under some clear guidelines. So businesses like Stripe, Visa would be seen as issuers like banks, and they would need to hold 100% fiat reserves, undergo regular audits, and follow stricter regulations, similar to banks. But finding that balance isn't easy. The left would say that they're not doing too much to protect the people, and the right would say that they're stifling too much innovation. And they're too slow, missing so much more economic opportunities. So that's usually going to be the three buckets that you're going to hear about, or rendition of those three buckets in terms of what arguments or how people would start talking about cryptocurrency when it comes to regulation or when it comes to application in the real world. I did a deep dive into these three different perspectives, a lot more on my Substack for free. So please go down below for the link. So what's next? Now that you're more or less caught up with what you need to know about stablecoins, hopefully the next time that maybe you come across it, you'll have a better idea of what's actually being said. But for now, I kind of want you to think, and I would love to know what you thought about this whole video. Would you prefer stablecoins to be regulated, or it should just be free for all and innovation will happen and regulation will happen and the private companies will care about the regulation? Would you trust those CBDCs, or would you prefer a corporate stablecoin? I would love to hear your thoughts in the comment. I love to hear it. I really do. And if you want to keep up with more tech and how it affects you and society around you, make sure to subscribe. And if you want a deeper dive, check out my Substack for a more in-depth analysis. And I also create guides around this so that you know the technology behind it and it's more accessible for you. Anyways, thanks for watching. My name is Paula, and I'll see you next time.